what's going on? It is James here with Crypto Common Sense, and I wanted to sit down today on March 14th, 2023 and shoot a market update video. A lot has been happening over the last few days, and I'd like to unpack some of that and give my opinions. I dropped my microphone and broke it last week, so I had to order a new Blue Yeti. So hopefully this sound quality on this video is where it needs to be. I did some adjustments, but it's always tough getting new mics locked in perfectly, so we'll see how it goes. Before I jump into the content, please remember that nothing in this video is financial advice. Obviously, you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other investable asset. So let's talk about the big elephant in the room, which is this huge 30% pump on Bitcoin. And let's take a look at what's happening and why it might be happening. So first things first, I don't understand this market, and it seems like people would learn from their mistakes, but that's not what happens in markets. People continue to make the same mistakes over and over. They don't educate themselves on technical analysis. They don't educate themselves on how markets work. And so they continue to make these same mistakes that are costly mistakes. And every time Bitcoin moves, people who are bullish or hopeful, and usually that amounts to, hey, I've got a bunch of Bitcoin and I'm underwater and I'm hoping like hell I can break even someday or even make a profit, or hey, I hate my job and I want Bitcoin to save my life and make me rich, right? All those things put all this undue emotional stress on the situation, and it really clouds people's thinking. So every time there's a pump in a bear market, you have a certain segment of people who get super excited and start talking about, this is the new bull market. This is the new bull market. Eventually they will be right. Eventually one of these pumps will probably lead to a bull market. And I had an alarm go off in the middle of the video. So what I was saying is, if you jump in every time Bitcoin pumps during a bear market, you're probably going to end up losing a lot of money over the course of that bear market. So before we look at the technical analysis side, let's look at the fundamental analysis, which is super important to understand. Unlike stocks, crypto doesn't have a lot of fundamentals to look at. And I think that's kind of a good thing because it makes it a little easier to trade. Back in the day, people used to argue and say, oh, you can't use technical analysis and fundamental analysis on cryptocurrency. Complete utter nonsense. It works exactly the same. In fact, in my opinion, it works better in cryptocurrency. And so if we take a look at the fundamental analysis, we have one key fact. Bitcoin has been disproven as a currency. It's failed miserably in that aspect. It cannot keep up with credit cards. I think there could be technological advances that may change that someday for Bitcoin. It may actually end up being a viable currency. We also have this narrative that went around, especially in 2020 and 2021, that Bitcoin would be a store of value, and that when inflation started to hit due to the Fed's unlimited money printing, that Bitcoin would skyrocket to, many people were calling for $250,000, $500,000, even $1 million Bitcoin. Instead, what happened was Bitcoin fell, not only with the market, but faster and further than the overall tech market, having an over 70% correction from its high of $69,000. So the idea that Bitcoin is a store of value, I thought at this point was pretty much an accepted fact amongst everybody in this space. Unfortunately, this week, as we've had this case of banks unraveling, surprise, surprise, the government's stepping in to bail them out. They can call it whatever they want. It's really just a reworded bailout. And now people are suddenly saying, well, Bitcoin's a store of value. Look at Bitcoin skyrocketing while the banks are falling. Folks, let's just point out facts here. Let's forget this nonsense and point out facts. Bitcoin is currently sitting at $24,537. In 2021, Bitcoin was $69,000. I don't know about you, but I don't personally want to have a store of value that loses over half its value. That's not a store of value at all. It's a risk-on asset. And it's perfectly fine that Bitcoin is a risk-on asset. That's great. Risk-on assets tend to be more profitable. Store of values tend to, store value. They don't tend to go way up in value. They tend to just kind of stay mundane or keep up with inflation. We don't want Bitcoin to simply keep up with inflation. We want it to go up, up, up. We want it to be a risk-on asset. Okay? So let's go ahead and put that to the side. Obviously, Bitcoin is not a store of value. It is a risk-on asset. So if we look at the broader fundamental picture right now, the market is bad. We have banks failing, folks. We have the government having to step in to save banks. Is that bullish? Does that really sound bullish to anyone? I mean, for somebody to look at that and say, well, it's time to get bullish on risk assets, I'm sorry, I just don't understand that line of thinking. And I think in 99% of cases, anyone saying that is saying it because they're emotionally involved in that decision. And I'm somebody that has an investment in cryptocurrency. I'm somebody that holds an investment in Bitcoin. Even though I'm not a huge Bitcoin perma-bull or anything like that, I do think cryptocurrency warrants a certain percent of a person's portfolio. I do think that there is a high enough chance that over the long term that Bitcoin is a valuable asset. I think it's perfectly acceptable to take some risk with Bitcoin with the understanding it's probably going to go lower before it goes much, much higher. And that's fine, because if it's a long-term investment, 5 years, 10 years, 15 years, 20 years, whatever, it really doesn't matter a whole lot what Bitcoin is worth today. So for example, in my case, I've got some money invested in Bitcoin that's been invested in Bitcoin since 2017. What I didn't cash out, my quote-unquote HODL fund that I used to talk about quite a bit. And my goal with that is not to ever touch it. My goal with that is to one day just give it to my daughter, right? And it may be 10 or 15 years from now. And maybe Bitcoin goes to zero between now and then, and if so, that's a bummer. But if it does go way up to 6 figures and beyond, that's a really nice chunk of change that I can hand to my daughter as she gets out of college, right? Uses it for her down payment on her first home, etc., etc. So I have a long-term investment horizon when it comes to Bitcoin. As far as trading Bitcoin goes, no, I'm not looking for positional longs here where I'm trying to ride them to the next high. I don't think we're there yet. What we have here is a drastic move, a straight up move. We all know that markets don't typically move in straight lines. When you have a straight up move, you typically have some sort of correction afterward. 35% move up. Now, what would cause this? Well, there were technical analysis reasons. There were things I pointed out. For example, inside my Discord, talked about simple things that you can watch out for. Things like it was hitting the 200-day moving average, which is always a really good line in the sand to watch. Even if it doesn't end up being a turning point in the market itself, it's often a really good place to look for short-term swing trades. So you can see here it tagged that 200 moving average. It left behind this really nice demand tail, and a trader quite simply wouldn't have needed anything else. They could have said, well, if it takes out the high of this candle, I'll set a stop down at this tail, and I'll just try to ride it for a couple R, right? Well, they could have rode that for a maximum at this point of almost 8 R. So if they risked $1,000 in this trade, they could have made nearly $8,000 if they cashed out at the top. Nobody ever does. But even if they cashed out over here and they thought, hey, it's probably going to test resistance, right? It would have been a $6,000 trade on $1,000 risk, $600 on $100 risk, so on and so forth. There was a really good reason to take a swing trade on that test. But testing a 200-day moving average while ranging sideways like this is not a story that says, hey, the market's reversing and the bear market is over. We want to start looking at larger time frames if we're looking for market reversals, right? We want to start looking at things like the 200-week moving average, which in the past had always been a really good line of support on Bitcoin. You can see it rode along it back here in 2018, and it tested it in 2020. And both times we had these, absolutely massive moves up off of that line in the sand. But this time we actually came down below that 200-week moving average, which was the first in Bitcoin history to go under and stay under it like this. And really, if you're looking at technical analysis from a textbook point of view, this looks more like a bearish retest than anything else. I'm not saying that it's going to go down for sure. Nobody has a crystal ball. But when you break through a line of support and come back and hit it, more often than not, you get a continuation of that move. It's a lot more unusual to come through a line of support and then just turn around and go back up, right? That's a V bottom, and V bottoms don't typically happen, except in cases like 2020 where the government starts printing trillions of dollars, and then, of course, all kinds of things can happen that don't normally happen. But right now, this looks more like a bearish retest than anything else. And we have to talk about the real elephant in the room, which is what caused this pump. Well, Binance openly admitted that they moved $1 billion worth of stablecoin into cryptocurrency, including Bitcoin, Ethereum, and BNB. Guys, what that means is they literally pumped the market. They're openly admitting that they manipulated the market. They basically have their own little version of QE, quantitative easing, for cryptocurrency. So what caused this pump? Well, I don't know. You tell me. What happens when you put $1 billion into a market? Of course there's going to be a reaction to that. Now, unless retail suddenly starts jumping on this and ignoring fundamentals and continues this move, or unless Binance suddenly starts putting billions more in, how does this move sustain itself? I think the answer is quite clear. It won't. Retail is going to have to be excited about getting back in this market, or somebody else is going to have to continue to manipulate this market back up. In 2020, we had that manipulation, right? In 2020, I talked about this in Discord along with one of the other guys that I had done a course with named Donnie. We talked about how you could see the spoofing happening. And we hypothesized at the time that it was probably Alameda and FTX spoofing the market. Later it came out from people that were much more, IT oriented and much more internet sleuths. They more or less confirmed that theory that FTX was behind a lot of the pump in 2020 and getting this ball rolling. So could we see something like that happen again with Binance? It's possible. It's certainly possible. But I also think it's important to remember that for months now, for almost a year now, I talked about the fact that it's surprising to me that Bitcoin never went back and retested its supply zone around $28,000. Now suddenly we have this pump, which is not a big pump in a bear market at all. I mean, if you were getting excited about pumps, well, I guess you were getting excited over here at 45,000 too, right? I mean, if you measure the pump, that was 46%. So far, what we have down here, 71%. Okay? Go back and look in 2018 and bear market pumps. Look at this one, 98%. Okay? Look at this one, 46%. Those are normal rallies in a bear market. You tend to get big rallies because people FOMO in. That's what happens. Okay? But one thing you need to take a look at with this is if you're trading, put all setups aside, put all technical analysis aside. If you don't understand anything else about trading, you need to understand that markets run on supply and demand. The more supply there is, the lower price goes. The more demand there is, the higher price goes. Well, these tails left behind back in 2021 indicate that there's a lot of demand back here. That's what sent the market up. But once you break through a level of demand, also referred to as support, it flips to resistance or what we could call supply. So now there's a lot of people that got trapped back here that thought Bitcoin was going to $1 gajillion someday. And believe it or not, a lot of these people probably don't want to own Bitcoin anymore. And so what happens is when Bitcoin comes back up to these old levels, you will have people who have orders sitting there. They just want to break even. They want to wash their hands of Bitcoin and just get out. And that creates downward pressure, which is also, again, known as supply. So you get something that's just pushing down the market. So to get excited about Bitcoin and say, well, the bear market is over, I think we've weathered the storm, I really feel like we need to take out the top of this box at $35,000. Because at that point you've chewed through supply and it's a feasible idea that the worst is behind us. Until that point, not so much, right? Not so much. Again, if we look at things like a volume profile, which is always a nice handy tool to have on your chart. All right, this is the all-time volume profile. We can see that most of the trading was happening down here under $12,000, and that really everything above this is just more or less open air. And so usually, not always, but usually speaking, you're going to go back down and start filling in these volume gaps, which again, I still think price is going lower. I still think we're going to see that $8,000 to $12,000 Bitcoin, right? And if things get really bad in the stock market, then we may even fill in this gap down here all the way down around $3,000. Now, that's probably the opposite of what most people are saying right now. I don't care. I've gotten used to being contrarian. I've gotten used to being the lone wolf out there saying, hey, look, let's use some reason here instead of getting all emotional about this. And quite frankly, it's served me very well the last few years, while a lot of other people have been getting wrecked trying to long Bitcoin in a bear market. This is really simple stuff, right? If we go and look at one of the charts that I posted 16 months ago, the chart that's basically been prophetic during this whole bear market, we can look at Bitcoin versus the QQQ. We can say, hey, how does this chart look right now? Take these alerts off here, take the volume profile off for now, and just take a look at this. All right, here's the chart. I posted it up over here, November 2021, and so far so good, right? Just following that chart. Now, again, I talked about this a month or two back, saying this may not be anger down here. This could potentially actually be the depression phase, and maybe this is the bottom. I don't think so, but we got to keep that in mind because this chop through here might actually be this chop through here, which means that maybe we are going to go into a new bull market versus the QQQ. It's absolutely possible. I don't want to write off that as if it's impossible. It's certainly not. I still tend to believe that this is probably anger, right? And that this is our pump right here, our last basically hope, before the real depression kicks off. And I think that lines up nicely with the stock market, which I'll talk about in just a few minutes. Again, this whole box here is really a supply box that needs to be taken out before I get too excited or too bullish about Bitcoin. So far, we're not doing that. We did sneak up into it today, which was interesting, but you can see we're being pushed back down pretty heavily, which again is a sign that there's quite a bit of supply waiting there. That supply needs to be absorbed, and we need to move up and above it before we get super excited. If we take a look at the stock market, let's jump over to another stock market chart here. The RUA encompasses about 97 to 98% of all U.S. stocks. And so again, this was kind of a theory that I had, put this on a weekly chart. This was a theory I had about the RUA, and my theory was that this whole pump right here was actually complacency. Okay, I still think that's entirely possible, especially now that we're seeing some banks starting to fail. It could be the first set of dominoes that are going to come tumbling down. And if this is complacency and this ends up being a recession and a typical bear market like previous bear markets, typically on the RUA we're going to see about a 50 to 60% drop. For example, back in 2000, 50% drop. In 2007, we saw about a 58% drop. So far, the RUA only fell 28% from its top to its low in late 2022, which means that if we have a typical bear market of about 50%, we're going to be looking at about 13 to 1400 points. On the RUA, right now it's at 2,200. That means from its current level, we'll be looking at a drop of about 38%, 38 additional percent from where we are currently sitting at. And again, if you're looking at Bitcoin and you're considering the fact that it's proven itself to be a risk-on asset, it would be unusual for a risk-on asset to be in a bull market by itself, while the broader market, 97 to 98% of all U.S. stocks, are in a bear market. Right, that would not make a lot of sense. It's not impossible. It could very well be a new bull market. But you got to have some sort of confirmation before you start talking about it. You got to have some sort of confirmation that the bottom is in and that there's strong technical analysis and strong fundamental reasons for a new bull run before you start throwing money at the market, unless you just want to cost average. Okay, if you want to cost average Bitcoin, the easiest way to cost average Bitcoin is just to set your levels. Hey, when it's under 70% down, I'm going to put money in every week, every day, every month, whatever it is. And you just ride that. If it's a long-term investment and you're okay losing the money, it's money you can afford to risk, oftentimes that's a simple way to go about trading the market, right? Or at least investing in the market, not so much trading. But yeah, my opinion is it's not that I hate Bitcoin. Again, I'm an investor in Bitcoin. I own Bitcoin. But I'm also realistic about what Bitcoin is. It's a risk-on asset. Just like when I own Robinhood stock, I'm realistic. It's a risk-on asset. I think Robinhood has a bright future. I don't actually love the platform. As far as a trader, I wouldn't trade on it. But the platform itself, I think, is a great platform. So therefore, I invested in it. I invested in things like Unity, which is a game development software, which is amazing. I've been using it on and off for over 10 years. I used to have a game development company. We used Unity back then in 2011 and 2012. And it's only gotten better. So I put money in those things, and I don't necessarily try to catch the bottom. If I like it and I feel like it's a good investment and a good deal, then I put money in those. And so, for example, on Udemy, and I'm not telling you to go buy Udemy, I'm just giving you an example. I ended up buying Udemy down around, I don't even remember, now I posted about it on Facebook, I don't know, $10 or something. Right? I bought it super cheap because it was like 90% off of its top. And I thought, well, I like Udemy. That's Udemy. I'm looking for Udemy. Sorry about that. There we go. So not $10. It would have been down here somewhere. I bought it late last year. And, I like this software. And when I looked at it, I said, hey, this is a software that I've personally used, I believe in. I think it's going to go up in the future. And it was down almost 90%. So to me, it was a no-brainer to put some money into it. So I think when people look at Bitcoin or Ethereum or any cryptocurrency and they say it's down 70, 80, 90%, I think it'll be worth more in the future. I believe in this. I don't think there's anything at all wrong with putting an investment in, as long as it's money you can afford to lose. But I do think it's a huge problem when you start getting overly emotional just because the market moved up 30 or 40%. That does not mean a new bull market is starting. Doesn't mean it's not, but it doesn't mean it is. But yeah, it is surprising to me how excited people have gotten about a bear market rally. And that's all this is until proven otherwise. It's a little crazy. Especially when Binance openly admitted to putting $1 billion in, which would be an obvious reason for the market doing what it's doing right now. Most of what I'm seeing right now when it comes to Bitcoin appears to be a short squeeze, right? If you go over to a site like coinalyze.net, which is the free site you can check out. You can go to Bitcoin, you can look at the liquidations, and you can see that just over the last 2 days, there's been, about 130 to 135 million dollars of liquidations. And as those bears are forced to cover their short positions, of course, when you cover a short, that means you're buying Bitcoin back, and that creates buying pressure. But what you want to see for a sustained rally is after these big pumps, you want to see them continue. You want to see other people step in and say, yeah, I want to own Bitcoin at this level. I want to see Bitcoin go up from here. But that's not what we're seeing. What we saw were these big spikes, which are typically indicative of a short squeeze, and then we see big sell, right? We don't see big buying continuing. We see people saying, oh, I'm going to take profits, boom, right? And pushing that back down. This was interesting because it actually went up, right? But again, then no follow through. So it's interesting. Part of me is happy that it's went up because it's like, hey, my investments are up. But most of me is like, it's temporary. It's not going to last. It's probably going to go down. And I don't trade the HODL fund, right? That's my trades are my trades. My HODL fund is my long-term investment fund. They're long-term capital gains. And I don't touch them, no matter how much I want to, In hindsight, it's always a fun game. You look back and say, well, I should have touched them. Of course, I look back at 2021 when I was bearish and I think, well, I should have sold everything. But the one time you do that, the one time you're arrogant and think you know for sure what's going to happen and you sell everything, that's the day the market pumps 50% and you're left on the side of the street, out in the cold. So that's why I don't trade the HODL fund. I always keep that small amount of cryptocurrency off to the side, and then my trade fund is my trade fund. So it's been a while since I did a video. Again, hopefully the sound quality is good. This is a brand new microphone. I just got it a few hours ago, and I tried to set it up with all the different settings and everything. It seemed to sound okay, but I don't know that I like it as much as my old one. Everybody says Blue Yeti is the best there is, but the other microphone I had was actually a little bit more expensive, and I've been using it for a decade and really liked it. So we'll see. Maybe I just need to play with this one and dial it in. So I will go ahead and wrap the video up there. Like I mentioned at the beginning of the video, of course, I am just some guy sitting in a spare bedroom, and that means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense. If you enjoyed the video, give it a thumbs up. Make sure you subscribe to the channel. And as always, please remember to trade safe.